Hello everyone, it's Tuesday 6th of August and it seems that for a second day we have seen trade jitters, Brexit risks and fears of a currency war actually continuing to add pressure in the markets and especially on yields and stock markets so far today. So it seems that as I was saying, the trade tension escalating, especially after the US officials actually stated that China is like is actually manipulating the currency. So this accusation is what drive the market overnight and added further pressure to our stock markets. You can see that this is the S&P 500 daily chart. You can see this big daily bearish candle breaking up below the 200-day moving average, and it seems unable to recover so far today and to move above, to move back to 2900s. So currently it's at 2839. So with this comment out of US officials regarding the currency manipulation from China, we have seen S&P 500 reaching 2774 low. So once again, trade tension, while on the other hand we still have markets which are not clearly buying into the Fed assertion that the last week's cut was just a mid-circle adjustment. The markets are actually have started to price in another cut in September with up to 50 points cut. So the easing stand is still expected, widely expected globally. So that's why we've seen dollar also suffering and remaining under a lot of pressure. Other than that, we have seen that these comments from US officials regarding the manipulation, that China is a currency manipulation, came after the Bank of China tried to stabilize actually the currencies, tried to stabilize yuan by setting it up to at 69.83 with a reference rate for today at 6.9683. Sorry. So actually, despite this attempt by Bank of China, we have seen that yuan is still very weak and continues to decline further. So on this news also we have seen yen spiking higher on this all this risk aversion. So we have seen it moving to the downside overnight. However, on the news we have a bit of weakness on the yen. It doesn't seem that it will last for longer. So it provided this up fractal over here, but the bears actually managed to push the price further to the downside, very close to this open price. So this candle suggests to us that the bearish momentum is getting stronger and that bears are likely having the control of the assets. So yeah, the next one is the doji candle, and then very next one, which is which will close in 15 minutes time, is moving to the downside. So this move to the upside seems to be temporary, and it seems that we will have a strong yen in the next few hours. But let's wait and see what's going on. Euro dollar spiked higher, it reached 112.49 area. So that was of course on the disappointing news, on the disappointing PMI services PMI yesterday from manufacturing PMI, sorry, from US, that actually pushed further the currency to the upside, while overnight we have seen a bit of correction down to 111.92. However, since the last 3 hours we have seen consolidating around 112. So it seems that it's just a correction on the before another flip to the upside for euro dollar. Let me move back to Aussie, because we had an announcement from RBA last night. So RBA left actually rates unchanged as it was expected. And once again, it highlighted the downside risk from trade tension. So stable rates from RBA. This is the daily chart. You can see that so far today, Aussie is trying to recover yesterday's losses. Let's move on to the intraday chart though. Reach 167.90. Is that it? 67.94. Move to the downside, tested this 20 period moving average and trying to continue to the upside. The next resistance remains at the day's highs, and the very next one is over here at the round 0.68 area. Support holds at the 20 period moving average in the 0.6770 area. Overall, like I'm stating every day, is a big decline in the long term for Aussie, and like with the rest of the antipodean currencies like Kiwi, so you can clearly see that. So in Europe, let's move back to Europe and the pound. Let me put that on as well. So pound remains at the low area, at the 2 years lows, 3 years low, that's 2016 area. So once again, no Brexit scenario is looking increasingly real, but what actually is looking increasingly real is the fact that Boris seems ready to risk for elections, for snap elections. So it seems that he's willing to risk a snap election in order to strengthen his power base, to work for the majority of parliament. So he's actually looking ready to risk a snap election before the October 31st, which UK is about to leave the EU. So let's move to the intraday picture. A bit of a sideways movement for pound around here. Okay, we have a double tweezer bottom over here. So that suggests that we might have a bit of a bullish momentum in the near term. So this is if that confirms at the end of the hour, if indeed we have these twisted bottoms, then we might see cable retesting this high over here at 121.73 or even higher at 121.87. So support remains at 121.34, which is pretty much the lower line of this range. On the break of that, it might retest yesterday's lows around 121.17 or even higher at the around 121 area. Last but not least, we had some data out of Germany. Just an hour ago, we had German manufacturing orders jump to 2.5% in June. So this is well above our expectations, and it seems that it gives us the sign. It gives us the conclusion that, you know what, German manufacturing sector might not be completely fallen off the cliff. So it gives us some actually hopes that this industry might still increase and getting back to where it was, but the overall picture remains weak as the annual rate remains well below the neutral zone. So we're remaining cautious, but this was slightly good news for for the Germany manufacturing sector. So that was for today. It's a bit of a quiet day. We have just JOLTS data out of US later on. So pretty much on from the data side, we don't have anything significant to be released other than the JOLTS report in the US session. So our focus remains on any news regarding the trade war between US and China, any news regarding Brexit, and etc. So thank you for watching. Hope you're having a great trading day ahead, and see you again tomorrow. Bye bye.